I'm going to teach you exactly how to use a TFSA in Canada. In this video, I'll explain what the TFSA actually is. I'll also talk about contribution rules, withdrawal rules, eligibility, investment rules, and what happens to your TFSA when you are no longer of this earth. That last one is a bit dark, I know, but we're all human. So what is a TFSA? Well, it stands for Tax-Free Savings Account. Don't let that fool you though. It is not just a savings account and shouldn't be treated as one. The TFSA is like a drawer for investing tax-free. You get to choose what you put in the drawer. And there are many different types of investments that can fit inside. These can be things like stocks, bonds, GICs, mutual funds, and my personal favorite, ETFs. The best part about the TFSA is that everything in this drawer is sheltered from taxes. So any gains you make within the account are not subject to tax from the government. So, if you're a Canadian looking to grow your wealth by investing, you should be utilizing the TFSA to grow a portion of your investments tax-free. It honestly should be called the tax-free investing account instead. Now remember, the TFSA does come with a number of rules attached to it. The first set of which has to do with contribution, which is how much you put into the account. There is a limit for how much you can put into a TFSA. This is called your TFSA contribution room. This total amount is cumulative, so any unused contribution room will carry over from one year to the next. The actual amount you can add to your TFSA will go up every year by a certain amount deemed by the CRA. This will go up regardless of whether you deposit money or not. Growth on your investments inside a TFSA does not affect your contribution room. And you're allowed to have multiple TFSA accounts. But the total contribution room applies across all of them cumulatively. This is for people who might want to use multiple banks or brokerages. If you're contributing in 2022 for the first time, you're eligible to deposit $81,500 in total contributions, assuming you were the age of 18 in 2009. Your total contribution room can be based on your age if you weren't 18 years old in 2009. If you've deposited some money over the years, you'll need to subtract that number from the $81,500 to figure out your max contribution. If you already have a TFSA and have never taken any money out, you can keep contributing to your account up until your TFSA limit. And if you've withdrawn money from your TFSA in the past, you'll get that room back in the following year after the withdrawal. I'll talk more about this soon. So, what is the best way to figure out your contribution room? The CRA My Account website can tell you how much contribution room you have left, but it is known to sometimes be inaccurate. I recommend keeping track manually or by using a tool that tracks your contribution, like Passive. I'll leave links for both in the description. Let's talk about withdrawing from the TFSA. In most cases, you can withdraw any amount from your TFSA without penalty. But withdrawals made within a specific year will only be added back to your contribution room at the beginning of the following year. Yes, this means that on January 1st of every year, you're allowed to replace the money you withdrew in the year previous, but not a day before. Alright, let's go over TFSA eligibility. To be eligible for a TFSA, residents and non-residents of Canada will need to be the age of majority in their respective province or territory, and must have a valid social insurance number. In some provinces, like British Columbia or Nova Scotia, you'll need to wait until you are 19 to be able to open a TFSA. But your contribution room starts from when you turn 18. And it is carried over into the following year. Here is the complete chart on what age you can open a TFSA depending on where you live in Canada. It's also important to note that any contributions made by a non-resident are subject to a 1% tax for each month the contribution stays in the account. Now for what you've probably been wondering about. TFSA investment rules. Types of investments you can hold in your TFSA include cash, mutual funds, securities listed on a designated stock exchange, GICs, and bonds. You can also contribute foreign funds, but they will be converted to Canadian dollars and count towards your total contribution room. Any investment losses within the TFSA are not considered a withdrawal, and therefore are not part of your TFSA contribution room. Oh, and there is sometimes tax applicable within a TFSA. For example, when you hold a foreign investment that pays a dividend. The dividends of foreign investments are subject to non-resident withholding tax. So you probably would want to put these in a non-registered account, or even an RRSP, rather than a TFSA. Something else you have to keep in mind is that you cannot day trade within a TFSA. The account is for long-term investments only, and the CRA actively monitors taxpayers that are actively trading within their TFSA. You can get into big trouble for this, and there is no set definition of what they consider day trading. So it's best to keep your buying and selling within the TFSA to a minimum. Okay, so we've covered the basics on the TFSA for when we are able to use it. But what happens to our account when we eventually pass away? Well, when you apply for a TFSA, there is a section where you name a beneficiary. You can name an individual here or you can set it to your estate, which will then refer to your will, for dictating what assets go to whom. The value of the TFSA at the time of death would go tax-free to your beneficiary. If the beneficiary takes the money in cash, then it's tax-free. But if the beneficiary wants to put it into a TFSA or RRSP of their own, they must have the contribution room to do so. Hopefully this video gave you a solid understanding of how the TFSA works for Canadians. And if you're looking for how you can start investing in Canadian stocks and ETFs, check out this video.